Welcome everyone to Vested Interest. This is Shane back for our monthly video on what stocks I am looking to buy in March. This is going to come to you March 1st, so first day of a brand new month. We are going to take a look at four of them. Alibaba, which we've been adding for the last month and a half, I'd say. Comcast, relatively new position. We're going to continue to add there. Realty Income seems to be dropping off a map, so we're going to add some there. And American Water is another utility company. I know last week I covered a couple that I was thinking about getting into. We did not pull the trigger on either of those companies, but American Water is one that I am looking at for potentially adding to this month. That would be a new position there. But before we get in the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you. And for those of you who may be stopping by for the first time on this channel, we focus on dividend growth investing, buying stocks in good companies that pay growing dividends, hold for the long term. Well, it's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing dollar cost average in the dividend growth stocks in the portfolio, into growing companies with positive cash flow that covers the dividend and with a high return on their invested capital. I cover all my investments into the portfolio. Tune back in every Sunday morning at 7:30. You'll see that portfolio updates where I cover what I bought, what I've sold, any options I'm in, any dividends paid out. There's nothing to pay for on this channel. We all have enough to pay for. I'm sure you have enough bills out there. But if you'd like to help out the channel, go ahead and take a moment to hit that thumbs up button. Drop a comment down below. Let me know what you think of the video. What are you looking to add in the month of March? Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community and hit that notification bell so you're notified whenever we put out any new content. Doing that really does help a small YouTube channel like me and get the word out about dividend growth investing. So let's jump into the video and look at the four stocks I'm looking to add for March, as well as the two ETFs that are going to be weekly buys, regardless of what the price is. All week, I'm adding at least one share of SCHD. Real surprise for any of you who have been tuning into the channel. SCHD and VTI for the rest of the year, at least for the rest of the year, probably going forward into the future. Let's jump into the video. So this is the Vested Interest Stock Screener. This is how I cover companies in my portfolio and companies I'm looking at adding to the portfolio. It is also, I have a video series called the Stock Pick of the Day series, how I look at a company on a high level and how I set up those Stock Pick of the Day videos. So if you have a company you'd like me to cover in that Stock Pick of the Day series, go ahead and drop it down below. And don't forget to hit that notification bell so you can tune back in and see that video in the future. Now on to the first company. This is Alibaba Group, ticker BABA. This is one I've been adding, like I said, at least over the last month now. Let's jump into this. This is a Chinese company. They are let's call them the Chinese Amazon. That's the equivalent company, right? They sell things online. That's what they do. And they are currently at $74.73 per share. This is actually on March 1st. You can see here I clipped this at 12:29. So they are probably fluctuating somewhere in the $74 range. That's just what they were at this point in time. Now, market cap of $188.75 billion. They do have a 52-week range as low as $66.63, as high as $105.05. So they are closer to their 52-week low. EPS is sitting at $5.38 per share. Price to earnings PE ratio sitting at $13.79 per share, with the forward PE even lower at 8.10, $8.10. They do pay out $1. They only pay out one time per year. Ex-dividend date was December, so they paid out in January, so they will not pay out again until next January. Now, Yahoo Finance, I'm sorry, this is stockanalysis.com. I pulled this from stockanalysis.com. So they have a price target of $123.18 with a 64.8% upside. They call it a strong buy. It has a beta of 0.47, which is less volatile than the overall market. This is the last year's stock chart. So you can see it's been up and down, pretty volatile overall. And where is the beta? There is the beta. Yeah, 0.47. So less volatile than the overall market, but still a bit of a volatility over the last year. Now, I like to get into the statistics and look at dividend yield theory, see if there's potentially undervalued. Unfortunately for this one, we don't have a 5-year dividend yield average to look at. Typically what you would do is you'd look at the 5-year average, you compare it to its current 1.35%. That's the dividend yield there. And you would say if the current dividend yield is higher, it would be potentially undervalued. If the dividend yield would have been lower than their 5-year average, that would potentially be overvalued. Again, unfortunately for this one, we cannot do that. It does have a low payout ratio, 18.31%. Dividend date is or was January 18th. That's whenever they paid out. Again, you can see the ex-dividend date there. Now, return on equity and return on invested capital, I like 10% or better for this metric. 9.90, pretty close, so I'm going to call that good enough. Same thing with the return on invested capital, 8.03. It's a little lower than the 10% I typically like, but not egregiously so. Now, this is where I really like the numbers. Earning per share forecasted growth over the next 5 years, 19.83%, very high. I like 5% or better there. And revenue growth forecast sitting at 8.03%. So they anticipate nice growing revenue, high single-digit revenue growth. Now, we'll get into free cash flow as well. Typically, if a company has growing free cash flow, they grow the dividend over time, and free cash flow is what you pay down debt with. It's what companies use to reinvest back into themselves, make acquisitions, further their business, and also pay out dividends, right? And as dividend investors, that's what we want. So going back to 2021, they had $188 billion in free cash flow. 2022 dropped a bit down to $89 billion. And back up in 2023 to $165 billion. It looks like so far in 2024, they're going to record $156 billion. We'll see how the rest of the year shakes out. And you can see they are repurchasing their own shares. So repurchasing 773,000 shares here, 61 million shares in 2022. 2023 looks like another 74 million. And they have recently announced they are going to continue to repurchasing their own shares, which I like that. Here is my position. Again, I own currently 84 shares. I am building this out. I want to get to at least over 100 shares. So I'm going to add to this one at least for the next couple of weeks. In the first couple of months or first couple of weeks of March, I may back off a little bit once I hit week 2 or week 3. Once I get over 100 shares, we'll see where we're at. It has been starting to climb. I was getting this down in the high $68, $69 range whenever I first started. They're up to 73. And my limit is mid $76 range. Or we're in mid, right? That's my cost basis, $73.43. So again, whenever I hit 100 shares, which will be over the next couple weeks, I'll probably back off on this one a little bit. I am up slightly, 1.89%. Currently have $6,168.35 into the position, and up, like I said, $108.13 or 1.89%. So that's Alibaba. We're going to continue to build that one out. Next on the list, Realty Income is a monthly paying REIT. And if I didn't mention, Alibaba is a consumer discretionary stock. But over to Realty Income ticker O. This is a monthly paying REIT out of the real estate sector. Currently, whenever I pulled this data up, it was $51.65. 52-week range as low as $45.04, as high as $64.89. Another one closer to its 52-week low and creeping down, it seems like every other day. Earnings per share, well, let's look here. Market cap first, $44.8 billion. EPS sitting at $1.26 per share. Price to earnings really high on this one. Now for REITs, you want to look at funds from operations, not price to earnings ratio. So this really doesn't matter for our purposes. Forward PE, same thing. Dividend, $3.07, 5.94% yield. Nice numbers there. Beta of 0.94, so it is just slightly less volatile than the overall market. Analysts call it a buy. They see a price target of $62.32. That's a 20.68% upside. That's just their estimate. That doesn't mean it's going to happen. Now let's take a look at dividend yield theory on this one. Again, you go over here and you look at their 5-year dividend yield average, 4.48. Look at their current, 5.91. I know it says forward, but that's current. Same number over here. If you looked at their, they say 5.94 there. But anyways, 5.91. And since it, well, this is probably because I clipped them out at different times, right? Time changes. We're clipping these in the middle of the day, so the time is going to change a little bit, or the percentages too, costs and everything else. But anyways, 5.91% is their current compared to their 5-year of 4.48. That does speak to some undervaluation with a nice margin of safety on this one. So this one is definitely undervalued, at least according to dividend yield theory. I don't pay attention to the payout ratio, 242.78%. REITs are required by law to pay out more than 90% of their free cash flow. So this is always going to be skewed a little bit, and I don't pay attention to it here. Ex-dividend date, they're a monthly payer, so their last one was $2.29. They'll pay out on March 15th. Return on equity, again, I like 10% or better. This is low. Now, for this particular metric, same thing, not a great one for REITs. If you compared them to other REITs, this does not look as bad, but it definitely doesn't meet the 10% I'm looking for at 2.8% on return on equity, return on invested capital at 2.85, same thing. So I don't like those numbers overall, but not terrible for a REIT. EPS growth forecast at 7.83% beats the 5% I'm looking for, and it does not have a revenue growth forecast listed. 2021 free cash flow sitting at 1.3 billion, 2022 up to 2.5 billion, 2023 up to 2.9 billion. You can just see that nice steady free cash flow growth. I really like that nice steady free cash flow growth, and they are not buying back any of their shares, but they definitely are aggressively paying down debt, which I like that. Negative 9.2 million, negative 27 million, negative 79 million. I mean, that's aggressively paying down debt. That's good to see. Again, I am long. This is in my portfolio. I do currently have 217.607 shares. I am down on this position, so I'll be decreasing my cost basis, increasing my future potential returns, and increasing my dividend yield on this one. Down $1,594.87 or 12.36%. My cost basis is $58.96 and currently $51.63. Obviously is much lower than that. You can see that, right? $51.65 when I first clipped it. Just a couple minutes later, it was already down 2 more cents. So you can see that change in time right there. So that's number 2, realty income. Number 3 on the list, another one that I recently added to the portfolio, Comcast Corporation, ticker CMCSA. This is out of the communication sector. Currently, at least whenever I clipped this about 1 o'clock, was $42.91. Market cap of $170.19 billion. They have a 52-week range of $34.63 on the low, $47.46 on the high. They are maybe, let's call it floating in the middle between their 52-week low and their 52-week high, maybe leaning a little bit more towards their 52-week high. And these charts, if you look at them, if you go back and look at them, they're all over the last year. Obviously, if you would have been buying it back here, would have been a much better buy, and you'd have got all this appreciation over the last year. But I wasn't buying them back there, so that just is what it is. EPS is sitting at $3.71 per share. Price to earnings ratio is sitting at $11.45 with a forward PE of $9.71. So most of these, if you'll notice, their forward PE is much lower than their current price to earnings ratio. Dividend is $1.24 paid out on the year, 2.89%, so decent starting dividend yield on this one. Now they say the beta is 1.01. That's more volatile than the overall market, just a tick more volatile. Analysts call it a buy. They have a price target of $49.76, which they estimate to be a 16.06% increase over the next year. Let's look at dividend yield theory on this one. Again, 5-year dividend yield average sitting at 4.48%. We compare it to its current 5.91%. And again, since it is higher, it speaks to some undervaluation. And this one, again, has a nice margin of safety, at least according to dividend yield theory. So really, really like this one. Payout ratio on this one, I know it says 242.78%. This is not accurate. If you were to go look at stockanalysis.com, this is off of Yahoo Finance. It is a much different number. So I believe this is off here for their reporting. Now, again, return on equity, I typically like 10% or better. This is sitting at 18.50, so it beats that number I'm looking for. Return on invested capital sitting at 9.61. I like 10% or better, but again, close enough where it's not egregiously below what I'm looking for. Earnings per share, I like 5% or better here. They're sitting at 13.45% with forecasted revenue growth of 2.21% over the next 5 years. Going to look at free cash flow again, right? 2021, 1.3 billion, 2022, 2.5 billion, 2023, 2.9 billion. Again, nice, steady free cash flow growth. Really like to see that. And another one, not repurchasing their own shares back, but they are paying down debt. Negative 9.2 million, negative 27 million, negative 79 million. Very, very nice to see them paying down that debt. Another one I'm long on. I do not have a big position in this one yet. I own 14 shares. My cost base is $41.94. Currently at 40. So you can see that again, $42.90 over here. Clipped it just a couple seconds later, $42.91 here, $42.90 here. So that's just because I'm doing this video throughout the day. Typically I do these after hours after the market's closed, but trying to get this one out since it's already March 1st. I'm a little late to the party. We've already started a new month, and I wanted to get this out to you. So again, up slightly on this one, 2.44% or $13.49. So Comcast, number 3 on my list to continue to add, and another one I'll probably build out to at least 100 shares, and then we'll back off a little bit and look at other positions. Now, number 4 for the individual stocks we're going to be looking to add. This would be a new position. I do not currently own any positions of American Water Works Company, ticker AWK. This is out of the utility sector. As whenever I pulled this at $12.59, $118.85, so up 0.26% on the day. They do have a 52-week range as low as $114.25, as high as $153.43. So definitely closer to their 52-week low than their 52-week high. Market cap of $23.09 billion. EPS sitting at $4.90 per share. Price to earnings ratio $24.19 per share. Again, same thing. Forward PE lower than that at $22.36 per share. $2.83 per year in dividends with a 2.38% dividend yield. Now, they have a beta listed here at 0.65, so less volatile than the overall market, even though you can see a bit of volatility here. Another one, if you were buying back in here, you were getting a better deal. But overall, it looks like a bit of a downturn throughout the year. Might be a good time to start looking at utilities. A lot of utilities are pulled back right now. Analysts call it a buy. They have a price target of $151, which would be a 27.01% increase. As you can see, a lot of these price targets are significantly higher than when they currently sit. Now, that does not mean they're going to happen. It just is what they're projecting out into the future. Let's look at dividend yield theory again. 5-year dividend yield average, 1.64. We look at it current, 2.39. So another one, according to dividend yield theory, undervalued with a nice margin of safety. Payout ratio, 56.68%. Under the 75% that I look for. I like 75% or less, unless it's a REIT or a BDC or a limited partnership where they're required by law to pay out more than 75% of their free cash flow. REITs, for example, are required to pay out 90% or more of their free cash flow. Return on invested capital, return on invested capital, again, 10% or better is what I'm looking for. Return on equity, it's pretty close, 9.7, just below that. Return on invested capital, a little lower than I like, but same thing. If you were to compare this, and return on invested capital, 5.11, so half of what I like at 10%. But again, if you were to compare this to other companies in the utility sector, these numbers actually look very good. EPS growth forecasted over the next 5 years, I like 5% or better, sitting at 7.36, so beats that metric, with a very nice revenue growth forecasted at 7.42%. Now, free cash flow is never going to look good for utilities. They are very capital intensive. They often have write-downs, and no different here. 2021, negative $432 million. 2022, negative $1.3 billion. 2023, negative $860 million. Looks like we don't have anything for 2024 yet, but they are they are paying down their debt. Another one, not repurchasing their own shares, but definitely paying down debt. 872,000 here, 15,000, 282,000. This is probably 872 million actually. In Yahoo Finance, you're supposed to add 3 zeros. So like that they're paying down debt. Wish they were buying back their own shares. Maybe they will do that in the future. So now that we've covered the 4 stocks that individual stocks that we're looking to buy, here are a couple of the ETFs that I'm looking to add this year. I'm going to add 1 share of each of these. We'll start with SCHD. So 1 share per week is what I'm adding. And if you are doing a similar challenge or have joined this challenge, let me know down in the comment section below what you are adding to any ETFs, any positions on a weekly basis, regardless of what the price is. That's what this one here is about. I don't care what the price is. I'm just going to pick up 1 share and add it to the portfolio. The Schwab US Dividend Equity ETF, ticker SCHD, currently at $78 per share. This is going to look a little different. We're not going to look at dividend yield theory or any of that. Price to earnings ratio, $14.81. Expense ratio, very low at 0.06. 53.01 billion in assets under management. Dividend is $2.66 per year. That is going to fluctuate a little bit because they change their dividend by quarter. It's not typically the same every quarter. They're basing it on how the companies in the portfolio are doing. Ex-dividend date was December 6th. Their 52-week low was $66.67. Their 52-week high, $78.14. Definitely right close to their 52-week high. A beta of 0.81, less volatile than the overall market. They do have 104 holdings. It was created October 20th, 2011. And here, over here to the right are their top 10 holdings. So Broadcom, ticker AVGO. Merck, and Broadcom is out of the communications sector. Merck and Company, ticker MRK, out of the healthcare sector, sitting at 4.45%. Broadcom at 4.75%. AbbVie, ticker ABBV, this is out of the healthcare sector as well, 4.41% of the portfolio. Amgen, ticker AMGN, I believe this is all out of the healthcare sector, 4.37%. The Home Depot, ticker HD, this is out of the consumer discretionary sector at 4.25%. Verizon Communications, ticker VZ, out of the communications sector, is sitting at 4.16% of this portfolio. Cisco Systems, ticker CSCO, out of the information technology sector at 4.02. Texas Instruments, ticker 3.92, or I'm sorry, ticker TXN, with a 3.92% allocation, and Texas Instrument is out of the industrial sector. Chevron Corporation, ticker CVX, 3.86% of the portfolio, and Chevron is out of the energy sector. And the last, number 10 out of the top 10 holdings, the Coca-Cola Company, ticker KO, 3.81% of the portfolio, and this is out of the consumer staples sector as well. Now, relatively new position. I just started adding one share a week in January, the first week of January there. So currently 9 shares. I am up 1.54% or $10.89. My cost base is $76.87. So again, 9 shares, going to continue to add. Should get to 52 shares by the end of the year. If this one was to pull back significantly, I would probably increase my allocation here. And last, the second ETF we're going to add 1 share every week, regardless of the price, is the Vanguard Total Stock Market ETF, ticker VTI. This is the entire United States stock market, every company in the United States stock market. $254.45, at least when I clip this at 1:06 p.m. Assets under management, $371.09 billion. Expense ratio, even lower than SCHD at 0.03%. Price to earnings ratio, $23.75. So that tells you what the market is right now, $23.75. Dividend yield is 1.34%. So low dividend yield on this one. Payout ratio is only 32.04% though. 1 year return was 27.26%. $252.62 was the for the low for the day. We'll look at the 52-week low. $190.18, 52-week low, 52-week high, $254.53. Again, if this was to pull back significantly, I probably would look to add maybe a couple shares, and a beta of 1.03. So it actually is a tick higher than the overall market, which is strange because it really is the market. Holdings, a lot of holdings, 3,749 holdings in this particular ETF. And over here to the right, you can see the top 10 holdings. Microsoft Corporation, ticker MSFT, makes up 6.24% of the portfolio, and this is out of the information technology sector. Apple, ticker AAPL, makes up 5.8%, another one out of the information technology sector. It's heavy in tech. NVIDIA, ticker NVDA, 3.07%, another one out of the technology sector. Amazon, ticker AMZN, I believe this is out of the consumer discretionary sector, makes up 3.07%. Meta, another tech company, ticker META, makes up 1.84%. Google Class A shares, Google Class B shares, 1.77% and 1.47% respectively. Berkshire Hathaway, ticker BRK-B. So this is their B share, Berkshire B shares, 1.45%. Eli Lilly and Company, ticker LLY. This is out of the healthcare sector at 1.17%. And Broadcom. You saw Broadcom on SCHD as well. So AVGO, 1.12%. So very tech heavy actually in the top 10 holdings. Makes up 27.06% of the overall basket of stocks. Another one, I've been adding one a week, so 9 shares just like SCHD. My cost base is $244.22 per share. I am up 4.13%, $91.96. So again, this one was to pull back significantly. I would probably add maybe 2 shares to it per week until it recovered. But another one, I'm going to add at least 1 share. I don't care what the cost is. I'm just going to add 1 share and buy the market every single week. Here are some other ones you might be interested. Pfizer, ticker PFE, out of the healthcare sector. Enbridge, ticker EMB, out of the energy sector. Next Era Energy, ticker NEE. This is a utility company. Nutrien, this is a Canadian company, so some tax implications. Ticker NTR, out of the material sector. Owens Corning, this is a building supplier out of the industrial sector. That would be a nice one in my portfolio. I'd love these guys to pull back. Genuine Parts Company, ticker GPC. This is an industrial company. And Johnson & Johnson. You can't go wrong on adding the Johnson & Johnson, ticker J&J. This one is about where my cost basis is now, so I've not been adding, but it is still, in my opinion, one to take a look at and potentially add. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment. Let me know what you are looking to add in the month of March. Can't believe we're already in March. I feel like it just flipped the calendar to 2024, but here we are already 2 months in. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, if you have a company you'd like me to cover in the Stock Pick of the Day series, drop it down below. Don't forget to hit that notification bell so you're notified whenever we put out that video. And stop back in and see us for the portfolio updates on Sunday, as well as the Stock Pick of the Day series Monday through Thursday, where we take a look at a stock that has pulled back on the day. And that is it for this one. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping in. Thanks for tuning into the video. Really hope you enjoyed it. Let me know down in the comment section. Hit that thumbs up, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount now comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.